The retail recession hits real estate. Let's have a look. Hello everyone, Florian Heise here and welcome to another episode of HeiseSays. I've got my lunchtime coffee and I thought we would have a look at this article shared by real estate or commercialrealestate.com.au and originally from the Sydney Morning Herald. More landlords spooked by collapse of high-profile retailers, and we've heard this over and over again. It seems to be a daily video at the moment. Only this morning I released a video I filmed late last night about Kampfland pulling out of Australia, abandoning Australia. Now there's photos emerging on ABC of empty development sites in the middle of Adelaide, ready for distribution warehouses. I was speaking to a viewer on Facebook. He sent me a message saying he had friends who he knew had gone over to Germany to start learning about the business. 200 people, remember, were hired. It's a pretty drastic move. And, I mean, it lines up with, let's just bring up the old consumer confidence that was just released. But what I will talk about later today is the unemployment rate. It's gone down. So that's a good sign. Or is it just the jump from Christmas? Let me know your opinions in the comments below, guys, and let's have a look at this article. Shopping centre landlords are spooked by the collapse of high-profile retailers, will likely be forced to renegotiate rents as store closures eat into occupancy rates and income from malls. Now, if you do happen to hear thunder in the background, this is the rain that has arrived a little bit earlier. Apparently we weren't meant to get rain until April and it's January, but you know BOM is 100% accurate in their forecast 100 years in the future, aren't they? Nevertheless, back to the article. And I know you probably can't hear it with the microphone, but I can. So, Australia's largest retail landlords have so far resisted pressure to cut rents, but they will bear the brunt of an unusually high number of store closures after a slew of well-known merchants raised the white flag in the face of persistently challenging trading conditions. Now, there is a reason why these landlords want to keep occupancy rates high. And I didn't realize this when I was signing up a retail lease. When they gave me a sweet deal to sign me on for another 3 years, they gave me, locked me in at a lower rent and kept me going, which was a mistake. It ended up biting us. But nevertheless, they want to keep people in. They want to keep their shops occupied. They want to keep tenants in there. They'll do what they can to do it because that affects the valuation of their property. You know, the occupancy rate affects the value of the property. The more people they have occupying it, the longer the lease terms are, the more valuable their property is. So if people start dropping off, we're hearing this more and more and more, it's going to worry these businesses. It's going to worry them. And there's one here, Centre Group. And I'll just type it in here. Centre Group. Let's look up their ASX results right now, guys. Share price. So it's $3.91 and half a cent. And it's just gone down a little bit. So you can see here where it's been sitting. So say Centre Group, and they're the country's largest shopping centre owners or mall owners, as they're speaking about in this article. If they had a big hit in the number or lost their occupancy rate dropped, you could see that would decrease the valuation of their properties, and then that would affect their share price. So guys, who's rushing out to buy this now to prepare? Let me know. So the country's largest mall owner, Centre Group, in particular, faces a major task to replace struggling retailers with as many as 87 stores across its portfolio in voluntary administration. Just think about that, 87 stores. It's a lot of businesses. Centre operates the vast network of Westfield branded malls founded by Sir Frank Lowy, including centres in Chatsworth and Bondi Junction. Now you also have to remember, we looked at Stockland's earlier in the year, some of their media reporting, and in their reporting, their financial reporting, they were alluding to the fact that they'd successfully offloaded $500 million worth of their retail centres, and that they were planning to offload another $500 million. So it just kind of slipped in there in the media. No one seemed to pick up on the fact that Stockland's, another owner of a lot of these regional centres, was offloading $1 billion worth of them. So another large mall manager, Vicinity Centres, has exposure to at least 33 redundant stores run by failing retailers. Vicinity managers and Chatstone Mega Mall in Melbourne and Queen's Victoria Building in Sydney. So far this year, women's wear chain Bardot, 58 stores, science retailer Curious Planet, 63 stores, discount department store Harris Scarf, 21 stores, game seller EB with 19 stores, and audio retailer Bose, about 8 stores have announced closures. Fashion retailer Jeans West also collapsed last week, with many of its 146 stores likely to close. Richard Lee, the local vice president of fast-growing Chinese variety retailer Miniso, told The Age and the Sydney Morning Herald he had seen landlords recently become much more willing to talk shop. There you go. Miniso has 32 stores, including a number at the country's largest shopping centres. So this is an opportunity for existing retailers. But these are, bigger chains. What about the mum and dad people that sign up into these places to open their one little shop or their franchise shop? Particularly if they lose an anchor tenant and that hits the foot traffic, how's it going to affect people? So you can see here, guys, how the retail recession can affect, these smaller businesses, all these change, then that flows through to the bigger business, then that, decreasing the valuation of their properties, then that flows through to the share price of this, then it goes from one thing to the other, and then you get the unemployment resulting from the reduction of these shops. So we always try and talk with them to reduce our rent. Every year we bring up the topic, and previously they've never bothered to talk to us, Mr. Lee said. They're very arrogant when it comes to rent, but recently it's weird, a couple of them have wanted to talk with us. With plans to have 100 stores by the end of the year, Mr. Lee notes rent is one of his company's largest expenses, and yes, it is a big expense. He believes landlords may have been spooked by the recent slew of retail closures and could be seeking to lock down their current tenants. For that very reason I told you guys, it's locking down the value of their assets. They don't give a crap about the tenants. Not at all. Don't make that mistake to think that they care about the tenants or they care about the shoppers. They just want to keep people locked in, they want to keep money flowing through, and they want to maintain the value of their asset so that their share price and their bonuses can perform well. There's nothing wrong with that. Just don't be naive about it, everyone, and use it to your advantage. I wish I had have known. They're trying to keep current tenants and looking for long-term leases, he said. In a note to clients, USB analyst Grant McMaster downgraded Centre's shares to a sell rating, warning investors in the real estate company would suffer the most from the abnormally high number of store closures over the past months. Analysts expect Centre's occupancy rate to fall slightly throughout 2020, noting the company could also suffer from further anticipated store closures at Big W and space rationalization at retailers Myer and David Jones. Centre Group said annual customer visitations across its portfolio were 535 million and growing. Occupancy was above 99% and had been for around 20 years, a spokeswoman said. So they're complacent. If they've had 20 years of 99% occupancy, they're complacent. Maybe they need to learn the hard way, everyone. We're always listening to customer feedback to identify new and sought-after brands so we can remix and curate the right offering of retail products, services, and experiences, she said. Do you think she actually believes that? I guess. Do people believe the stuff they say in these big corporations? Maybe they do. Maybe they need a few more years to become cynical. Both of Australia's major department stores flagged at their full-year results last year they would take an aggressive stance on renegotiating leases, with both Myer and David Jones looking to reduce store footprint by 10 to 20%. Premier Investments, which owns brands such as Smiggle and Just Jeans, also told investors it would play hardball with landlords, saying it had no qualms about walking away from leases where landlords did not provide realistic rents. Broadly, Mr. McMaster said the retail sector was unlikely to improve, noting it was the worst performing sub-sector for 4 years running. UBS also predicts specialty retail sales will remain in the doldrums, forecasting sales growth of just 1 to 2%. While Miniso's same-store sales growth... What? While Miniso's same-store sales growing at a clip of about 20% a year, the retail has managed to avoid the malaise of Australia's retail market, with Mr. Lee warning conditions have remained grim into the new year. The general market, it's worse. Most people are suffering. So there you have it, guys. Some insight into the impacts of this retail recession on, well, the real estate sector. What do you think, guys? What do you think? Where do you think this will lead? What will 2020 tell us all? And will any of you rush out to short some of these shares? Or maybe you should have done that yesterday. Let us know in the comments below. And thank you to everyone for watching. If you're a fan of the channel, please like, share and subscribe. If you'd like to support us extra, we have a Patreon where you can join and make a monthly donation. We also have the ability for you to join the YouTube channel. We get access to badges and emojis. All the donations people make there I spend on the channel. I just bought some new equipment to allow me to, I think it's called an action camera. That's it, I bought a new action camera to allow me to record some other things that I'm experimenting with. That'll probably be terrible, but you've got to give it a try, don't you? We also have affiliate links for Independent Reserve if you're a crypto trader, and Amazon and eBay if you're for any of your consumer purchases. Finally, we've got pocket squares, handmade here in Queensland by Rachel in our very own house, and PayPal if you want to contribute like that. Thank you to everyone who's supporting the channel. Take care, guys. Have a great day, and I will talk to you all later. Bye for now.